What's an example of a boring safe investment?
This depends on how comfortable you are with risk. So really boring investment would be like putting money into the bank. Something that's slightly less boring, I really like these, are prize bonds. So prize bonds are a no-lose lottery. So basically your money isn't going to ever decrease, but you could potentially win like 10 grand, 100 grand or €1,000,000, because what they do is so you put in 50 quid, you get 5 tickets, right? Every single ticket is raffled once a week, and they have different prizes. So like, I personally had some prize bonds and won 50 quid a while ago. It was great. They're still quite low risk, but you have something like Bitcoin now, where there's a big craze, there's a lot of attention on it, but there's no historic basis for anything. There's no way of valuing it. So it could be gone a year from now. It could be made illegal. There's no consumer protections. You could buy Bitcoin and try and spend it, but if someone just defrauds you and steals your Bitcoin, there's no consumer protection for it. So it's quite unsafe, but also if you put all of your life savings into Bitcoin now, something could happen tomorrow, like has happened, where an exchange gets hacked or it's made illegal in a certain country and the price goes down massively, and then your savings are halved. So that's quite a risky investment. And then you have other things like bonds. So you're buying the debt of a company where they're going to pay you back little by little, and then at the very end they're going to pay you back the full amount you put in initially. So bonds are quite safe, because if a company goes bankrupt, they're going to have to pay the bondholders first. That's just one of the rules around bonds. Whereas if you're an equity investor and you own a part of the company, if the company goes bust, the bondholders get paid first, and then they sell all the rest of the stuff. So you might get 50% of the money you put in, if you're lucky. But if the company does really well, like if you think of Apple, the last 10, 15 years, they've done amazing. Like the iPhone, the iPad, iPod, all that stuff, lots of i things. The company has gotten like 20, 30 times bigger than it was like 10 years ago. So if you're an investor in the company, you take the risk that the stock price can go down, but if the company does well, you get the reward of the stock price going up. And if they pay dividends, then you're actually getting paid as well as having this, technical increase in your money if you were to sell. So there are different types of risks and rewards you would expect to get. If you like this video, please like and subscribe to our page.